So let me have a quick look and see if we can just do the, yeah, we can do the, just going to quickly put the weekly on for a sec. I just want to see where we are. In fact, I'm going to do one thing here. I'm going to just make it, let's do 4 time frames. Yeah, we'll start with the weekly. So let's have a little look to see where we are. You can see that obviously the market has pulled back, and we're going to identify some support and resistance points. Let's start with the easy stuff to find where the market might stop. So let's so if we're going down, we can see that this is quite a nice level there, which is where we are right now. We've created a little bit of indecision here right now. If we kind of clear this level, then we'd be looking at probably around here as the next level. Okay, and then on the way up, we always look at past support that becomes resistance. So I quite like that as a really nice zone to potentially target. Now, you can see here that when you look at the weekly, guys, you can see we have a lot of indecision. So this is like 3 weeks worth. So if you want to play a swing trade, this is quite nice because, you know, you could, if I just get my pen out, you could potentially be looking to put a limit order in to see if you can get a nice price and then try and catch it there. And then in that case, you'd be holding it over Christmas. This would be like a, you know, trying to buy somewhere here type thing to take it back up here. That could be a nice swing play. So you've got about 500 pips there, potentially. So you've got, you know, you've got nice resistance that becomes support. You've got some indecision there, holding bar, and then what it could do is it could eventually create an evening star and potentially push higher into kind of this block here. Okay, so that's the kind of longer term thing. Now, if we're going to do that, we have to also go and have a look at the smaller time frames to identify where that might happen. So what I'm going to do on this occasion, I'm going to just move straight into the daily chart off this one, because it might be easier. And so one of the things that we can do, I think it's already done a 618 pullback, but let's have a little look to see from high to low, where has it pulled back to? So it's gone back into this little zone here. It's still kind of ranging here. It could do a double bottom. It could do a double bottom. And if you kind of look over here, it did do something like that last time, didn't it? It kind of went up, went down, did that kind of double bottom formation, and then went up on exactly this level. So there's a chance we could do that. So one of the options is to literally stick an order in around down here. And we can go into the lower time frames and see if there's anything here more telling, but somewhere here could be interesting. So anywhere around this block could be a nice, interesting area to get in. And, you know, what I like to do is I like to find like points below where I can kind of tuck my stop in. So if you look over here, you can see that we've got quite a nice level there that recently acted as resistance. So if we kind of use that red line there and then say, okay, well, why don't we just go below that as a stop? Let's make this, in fact, let's change this color to yellow. And so you could be looking at basically entering there, stop there with a target up there. And that kind of gives you about 5-to-1 swing trade on the euro dollar. Okay. Now I'm going to go to the lower time frame, and we're going to see what the lower time frame looks like. So let's leave that there for a sec. Let me go over to the 4-hour chart over here. And you can kind of see this is just ranging right now. It's not giving me signs that the market doesn't tend to just reverse this way. Like if you were looking at this, okay, objectively, you're going to say, well, look, we're going down, we're flagging, and we're probably going to break the flag and go lower, right? That's kind of what you could see. So essentially, if this is going to turn, the likelihood is it's not going to probably turn and do that. It has to almost just kind of create that sort of thing, that W pattern, or a little bit higher like that. That's how markets tend to reverse. So for those that are a little bit more conservative, here's what we can do. So instead of saying, hey, let me try and buy that double bottom and predict it, because maybe it's going to flag and go down, why don't we instead, we could potentially just draw in our lines, and you might say, well, look, okay, right now, that's what it looks like right now. Well, to be fair, it has broken this inner trend line now, and it is coming back and looking like it's going to test it. But I'd want to see a spike down. And then you could look at buying this. Now, you could also add in the DTR. So, like, let's see if I've got the DTR in here. Spiking, excellent. And let's put it in. Let's just make it so it's hit the DTR. I'm going to just make it 1.2, just widen it a little bit. Yeah, that's not too bad there. So, and I'd be looking at this possibly even tomorrow as well, like as it kind of goes into the DTR, maybe a nice little low test bar, and then you could possibly look at buying that. Let me just get rid of that. Now, the other option, but for me, it's not really something that I would be doing, is to obviously wait for this trend line to break. But considering, guys, that, we've spoken about, 116 being the target, it doesn't really make any sense. So if I just kind of draw this in, so 116 is there. So realistically, if you want to play this, it's really like, hey, fake out and then off we go. That's really pretty much the play for me if you're going to play this. Now, one little thing that we can do to try and find a nice little entry point is we could do a little sub fib here. Okay, so sub fib is where we take the current little mini cycle here. We take this AB right there. We identify where the pullback is. In this case, it's the 618, and then we could put in basically an optional buy there or a deeper buy there, which is the overextension. These for me become buy areas. So if you want to kind of get in on a limit, the levels that I would go with, guys, is 112.30 odd, 112.35, and then the deeper one, which would really give you a nice double bottom, would be this overextension at the 200, which is 112. So I would kind of choose 112.35 and 112. Personally, if you know how to do this, I'd scale in. I'd put 2 orders in. Otherwise, you can just choose one or the other. And then I'd still be going for that same target back up towards between 115 and 116. Or once you've got a good enough move, you could. Some people would even trail their stop and just see how we go. But in terms of stop, you could keep the same stop as the swing. So essentially, you're using the lower time frame to predict where it's going to stop going down, and then looking to buy up towards here, 115, or the overextension 115.83. So if you want a conservative one, guys, go for 115, because that also takes you nicely into the trend line there. So essentially, in summary, this here is our buy box. If you want to take this kind of setup, nice break there, nice little test in there somewhere, and then we're going for that little move there, and that. And what I like is that we'll also be below this level here as well. So if you want to do a tighter stop, you can, of course. You'll get a better reward to risk. You could probably make this a tighter stop here or even here if you'd like to. Just bear in mind, sometimes it takes out the lows and then does that, almost like a fake out, and that happens a lot in FX. So just bear that in mind, guys. But you could probably make this better than a 5-to-1. So to me, it looks like a nice setup in euro dollar.